This is Eric Mwatha with Mwatha.com. As a follow-up on how to pick stocks whenever you have a group of stocks and you'd like to reduce the group of stocks to a few stocks that might look promising. What I've done here is, let me begin with the process that I went through. I was already in the process of just scanning the market for ideas, and I came across a stock. Now, it doesn't matter what the stock does in terms of its business, but the fact that what I liked about this and what triggered my interest, and hence the reason for this video, is what I do is I personally go ahead and if I find one stock, just one stock that looks great, in other words, the potential for the stock is good, for example, I'm seeing the stock here breaking out. So let's say about $6.10, which could have been the high around sometime in May, somewhere there. So May highs. Stock's been consolidating for a couple of months, and then this month we see it moving about that resistance, which is the closing level right there. So I'm already seeing a breakout, which is a good thing, because right now in this market environment, I've been bearish. So anything that is breaking out in a market environment that seems to me that wants to go down is showing a lot of strength. Number two is we also see the stock here just moving above. Oh, that's not a good line. Let me try again. All right, we're moving to new highs right there. You see that? We just went to new highs right there on the monthly RSI. Also take note of where the RSI is trading right now, which is just a hair below 69.10. So what that tells me is that this one could very easily turn into a great moving stock. Now, because the stock is doing well, I have to question myself, wait a minute, am I missing something in the group? So you find one good stock and you go and research the group, because there might be something that is sector related and not just an individual story. Maybe the stock is moving because the entire sector is doing well. And you don't have to understand why the sector is hot. You just have to know that sometimes one stock can lead you to a basket of other stocks within the sector. Now, before I leave this chart, so we see that it's hitting one of the main requirements for an ultimate Mwatha breakout, which is you want a move on the RSI above to new 52-week, to new 3-year highs, if not all-time highs. I also bet you that the MACDs are just moving to new highs, and they are. The main MACDs are a high right there, and you see that the other MACD is just about to break to new highs here. So from a technical perspective, you'll also see that now these are not important. The other things I'm going to talk about here are not important, but the MACD making new highs, that is a requirement for the ultimate Mwatha breakout, and the RSI here moving to new highs, on 3-year highs. That's the ultimate Mwatha breakout right there. You can stop right there. You don't need to know anything else. But what I just, for the sake of education, is I'm also noticing that the on-balance volume is making a new high. Now, the on-balance volume is the accumulation or distribution of, in other words, are institutions buying the stock over time, or are they selling? And on-balance volume, quite simply put, is every time you have a positive close, the volume is added to the total. Every time you have a negative close, the volume is subtracted from the total. So as you have more positive closes, you add that volume to the cumulative total, which is a running total of volume. Like you can see here, we had almost 3 months of positive gains here, here, here. Because those months were positive, you add the total on balance volume, you add the total to the cumulative total, so you see that it's moved up, and that's what happens. You have 2 down months here, you subtract from the total, so you had a down month. So in other words, on balance volume just tells you whether generically whether institutions are buying into a stock or they are building positions, and they do that over many months and many weeks. Also notice that the stock, like I said, the market is in a precarious position here, but you see that the performance against the S&P 500 for this stock right there already moved to new highs about July, since July August time frame. So this stock has been outperforming the market since July or August of this year. What that tells you is that this is a powerful stock that could actually turn into a leadership stock. Now, the other thing is, and you always want to find stocks that move in tight patterns. Tight pattern right there, and then tight pattern. You don't want stocks that are, and I hope I don't know that I can just pull up a chart. Let me see. Some stocks, let me look at this one here, just as an example. See this one here? This is a weekly chart for a stock I just was looking at earlier. You never want to own stocks that have this kind of a formation. This is a 2-year weekly. Let me expound it to a 3-year weekly and we'll see. You always want tight action. See, for example, the fact that this stock had this huge drop here was a red flag, and that's why it had another huge drop here. Now you see that the stock has a history of bad drops, one there and another one there. You know, I don't. Whenever you own a stock, you want to avoid this kind of erratic movement. If I take a look at the monthly chart, see what we get. Again, you see the monthly chart. You always want to avoid stocks that have this kind of erratic movement. They are unpredictable. You want things that have some kind of nice upswing. For example, VR. No, that's not what I was looking at. There's one here that I just saw a couple minutes ago. Okay, here's a great stock. I mean, this stock has moved from about $14 since March. Okay, from about $10 since March of 2010. So in about under 2 years, about 20 months, you see the stock here moving from 10 all the way to 80. But notice how tight the action is. I mean, this is a very tight looking chart, and a great chart to always, and this is one way you can avoid, whenever you're scanning for stocks, avoid stocks that have erratic price action. That way you just get rid of them, so you can concentrate on stocks that have tight price pattern. Notice here how tight this is. Just tight. This is tight action. A move, tight, and then another move, and then it starts moving higher, but it's constructive. Okay, you always just by doing that, you're going to avoid a lot of bad stocks. So now let's go back to our stock that began all this, and it is M. Now remember, every time you see a good chart, you want to investigate. Now, I don't necessarily like this stock on a weekly chart. The weekly chart is not inspiring to me, because I see that even though the monthly, which is what we began this video with, looked good. See, the monthly looks good. What this tells me, this one is probably going to turn into a slow mover. And the reason why I don't like it per se is because on the weekly, see, I don't like the weekly, because now when I look at the weekly, I got this erratic movements on the weekly chart. Just all over the place. I don't like that. You want a tight price pattern, which shows that institutions are always stepping in to support the stock when it has any sidestep. A good stock is always going to be under great demand. So every time it pulls back just a smidget, you got people coming in and scooping shares desperately. So you have what seems like a nice trend. And the stock, look at the weekly chart which is a winning stock. You see how this stock has been hugging the 10-week moving average? So every time it pulls back, somebody is there to buy it. So great stocks have great price patterns. Now, on the other hand, this MRGE, even though it's going to take us to investigate the sector itself, I don't like how, just look at it. It's not It's not a very tight pattern. It's pulling back significantly, way below the 10-week moving average each time. So which means right now it could just again do the same thing, because history in a stock market tends to repeat itself. Secondly, sorry about that. So anyway, so once you figure out what stocks look good to you, now you go to the sector. Now, so what I've done is I've gone to this website here. It's a www.tickerspy.com right there. Right there. And what I did is, it's very simple. I just went to and entered MRGE, and it gave me two sectors. Once I pull that up, it gives you the sector in which the stock is involved in. So there's healthcare, IT, and then there's radiology stocks. So I clicked on those, both sectors, took the list from all these stocks, put them on a list. Pretty much that's what I did. Put them on a list. And once I put those on a list, the list is right here. And the best way I like to do this, especially when the market is on fire and I want to find great buy ideas, is I usually like to start by, now I have all this on a list, so there are about 40 stocks. Okay, because each page here has 10 on my stock charts, which by the way is I recommend the service. I use it. I've used it since 2003, and I don't think I would go without it, because it's simple. It gives me what I want, and there are many other services. Just whatever you are using, if it works for you, that's fine. I like this one because I can set it up to where things work the way I've set it up over years, to where it works, to where it gives me exactly what I need to look at the market. But needless to say, is one thing I can do with this website here is, which is, I pay for this, is so I can show you how to quickly reduce a group of stocks. Okay. And what I'm going to do is I'm going to go down here, hold on a second, and probably change the setting. Right now, the setting was on a weekly chart basis. I want to change this to a monthly view. So I'm changing all the charts. Oops, gotta select the charts I want. Change this into a monthly view. Change. Good. Okay. So now I'm gonna go to so now what we're looking for is pretty much something like this. You want a stock. Let's see whether I can. You want a stock that is making new highs in a bull market. RSI and MACDs are also making 3-year highs. This is a 3-year monthly chart. So a stock like this I would be interested in. Now, just for the sake of explaining to you, is once I see a monthly chart that looks good, I always want to know what the weekly chart is doing. So I check that out. Now, not a bad chart, but I'm going to discard this one because I do not see movement. For example, it's taken the stock 2 years to move from 25 to 65. Not bad. I mean, that's good gain. If you own that, you're doing good. Okay. But usually I want to find explosive stocks. Also, I don't like the fact that it keeps gaining and losing. For example, it moved from about $33 all the way to about $42 in 1 week and gave half of those gains. And the same thing happened here. It's got a lot of erratic intraday action or intra-week action, even here. You see that big spike in 1 week move, and then gave back a lot of, almost $3-4 by the end of the week. I avoid things like that. So this one I'm going to avoid. You want stocks with consistent price action. So quickly we're going to run through this. Of course I'm not going to look at this one as a buy just because the moving averages are pointing lower. I don't like those. Whenever you're buying stocks, if you want to buy the ultimate move, the breakout, the stocks are going to be pointing higher. Next stock. This one is not a bad one. So what I could do here is I'm going to write, and I'm going to do that is I'm going to note the closing high here, which is about $30. So I'm I'm just gonna put this as on my watch list, and I'm gonna put an alert for it for $30, because if should it ever break out in the future, above this level, it could be having the all the makings of an ultimate move at the breakout. So that all I need is the buy point, future buy point. I'm gonna avoid that one because it's moving lower. I don't like this one per se, and the reason why I don't like this one is because you also want to avoid stocks that come from a deep sell-off to a sharp recovery. Those are, even though you can see the stock wasn't bad here because you can say it was trading in this range, but here from 55 to 42, this recovery, I don't like it, just because if it breaks out, let's say immediately, it's going to have, this is a closing high, it sells off, and then it comes back, closing high, sells off, and tries to break out. V-shaped base, it's a V-shaped recovery. These ones tend to be problematic. The reason why they're problematic and they don't hold their price level is because this sudden move back to new highs is you've already seen a rally between this low and the former high. So by the time you come here, you're exhausted. These ones tend to have a high failure rate. So I will avoid this one. Don't like this one because it's all over the place. You can see just all over the place. I don't like that one. I might keep an eye on this one. Number one, just without going into detail, it's trading at 71 on the RSI. Trust me, that's where stocks start moving. The MACDs are already at new highs. So what I'm going to do here is I'm going to go to and just look at what the weekly chart looks like. I think a weekly chart is not going to be very promising. It's not that bad. Given that the market, and you can see, this stock has been inching high, and because I already know that the market has been pretty much under pressure since May, the stock's been moving higher here, and this is shown decisively by the performance against the market, and you can see right here this move. Performance against the S&P 500 on a weekly basis. Since this breakout here, stock's been on fire right here. So it's outperforming the market, which means should the market start moving higher, this stock could be one of the leadership stocks. So what I'm going to do here is I'm going to put an alert for this weekly closing high at about 68. Should it ever move above that, I would like to be a buyer of this stock, or at least consider it. So I'm going to put an alert here at about 67, 68, or 67 and a half. In the future, should the stock move above that, I would like to look at the chart again and see what it's doing. ATHN. So this one I'll put on a watch list, $68. So let's go back to our list again. Don't like that one, it's making new lows. Here's a stock that's trying to move higher. And you can see a nice, ever since the stock, let's see whether I can get this right because we need to see the RSI here. Notice ever since the stock broke out here on the RSI right there, made new highs on the RSI, stocks moved from about $40 all the way to, I would say, about 75 in a market environment that has been pretty much down since May of this year. So I would take a look at this one again. Now remember, it's work. It takes a lot of work to track these things. But if you do it, an hour here, an hour there, you'll be okay. Okay, now I might track this one. For now, I'm not really concerned because even though the stock is making new highs right there in price, you can see that the the RSI is not making a new high. And we also seem to have a double top here on the RSI. So to me, I'm going to avoid that for now. Remember, you can't own all the stocks, so you just got to be a little bit choosy. You got to be choosy as choosy as you want. You can't own all the stocks, so just be choosy. I was taking a look at this one, CPSI, which has a decent chart here. Now, one thing I can say about this sector, I see a lot of stocks moving close to new highs, and yet the market has been under pressure. So here's an area of the market that seems to be outperforming. Now what I'm going to do is I'm going to put an alert for about $72, $73 right there. Should the stock ever break out, I would like to take a look. CPSI number. So about $72, $73. Okay, now something here I want to point out here is I just took a look at the volume here. So the average volume for this stock on a weekly basis is about 4,500 or about just under 500,000 per week. I want to find stocks that have good. See, now that means that the weekly volume is not that high. It's just about 100,000. And today's volume, with halfway through the market, is 15,000. So I'm going to scratch off this stock. I'm not going to track this stock because the volume on a daily basis is not high enough. You want volume, you want stocks that trade in the hundreds, at least 200, 300, 400, or in the millions. The higher the trading volume, the better the stock, because that's mean you got more decisive price movement. Low price volume stocks tend to have erratic price action, like here, for example. I mean, all this is like this up and down action here is pretty much due to low volume. And so the average volume on this one on a daily basis is about 91. I think that's too low. Today it's only traded 15,000 shares. Let's avoid that one. So again, volume is another thing you need to consider. You don't want stocks that have low volume. You want volume in the hundreds, like 250, 200 per day, an average over the last 6 months or so. Here is one EM. Remember, this video is just supposed to be an educational video. I do this thing all day long, trying to find ideas. So I mean, I'm usually faster than this. So here we broke out, and then probably trading. Probably this is a buyout. Maybe this is a buyout candidate. Stock might have been offered at around this level. So let's avoid that one. Doesn't seem to have anything going on there over the last couple of weeks. I'm going to avoid that one because it's a new low. Avoid that one. Avoid that. Avoid that because of this erratic. See how erratic this price action on this stock is? Just avoid it. Don't even bother. Here's one that we might take a look. Number one, notice that always alert yourself whenever you see a stock that trades with the monthly RSI above 69 for months and months and months. That's a very powerful looking stock, because trading above 69.10 on a monthly basis it's only reserved for a few stocks. So HMSY. So I'm going to take a look at the weekly, see what we get on the weekly. Not bad. The stock's been moving lower. You can say it's been consolidating here while the market was under trouble. I would set an alert here should it break out about 27, so I can take a look at the chart again. So this one looks good. The average daily volume, the average volume on a weekly basis is about 2.6 million, which means on the daily it's about, and I'm just showing you this because so you can, about 500,000 shares per day. That's good. So I'll keep a track of this one for you guys, and about 27.5. So remember, I do this every day because this is what I do for a living, and you don't have to do it every day, 100. Just, find one or two stocks that lead you to good sectors. Just check one or two sectors a day. You're fine. Remember, you don't have to spend millions of hours doing this. You can't own all the stocks. Accept that. Once you accept that you can't own all the stocks in the market, then just find a few, and you don't have to. You can spend a few hours on the weekend. Now, all these stocks, while I was talking, I'm going to avoid them because they don't really seem to have the ultimate mother breakout setup. So sometimes I'll go through a group like this one in 2 minutes. Like nothing there, nothing there, nothing. MedQ. The only reason why I stopped here is because I saw the stock here. Again, what perked my interest here is the fact that you have this move here. Whenever you see that, that means that a stock that had a nice move, moved it from about $5 all the way to 14 in a few months. That's a good stock. And it could break out again. So I stopped just to check out, but I see the volume today is 10 volume this month, and we're right now this is October the 19th, and we are trading 10,000 shares this month. I'll avoid that. That's probably about 200. I mean, it's about less than 1,000 shares a day. Not good. And here is a stock that led us to this group. Right here, MERG led us to this group. So you can see it does look good from a monthly chart, even though the weekly is not very promising. NRCI, you know, I don't like the fact that it spiked up here in the month of August at $44 and ended up the month trading as low as $31. So this in 1 month, no, that's a big sell-off. I'm going to avoid that. It tells me that people are selling that stock en masse. Here's another one that we can avoid just from a learning basis is I wouldn't even waste time looking because of this erratic price action. Avoid such stocks. Here's one that I think I'm going to follow here because I see the last breakout was right there at about $65. The stock had a nice one. In fact, in a bearish market, nice one. So, and also notice that the RSI moved above 69.10. So I'm going to put an alert for this stock to follow this stock. In the future, the alert is going to let me know when the stock moves above about $97, because at that time I would like to see whether it's going to be a candidate for us to own. Remember, even though I suspect the market could be going lower fall of 2011, if I am wrong, I always want to have ideas ready for us so that we take advantage of those. And you always, because you can't do your analysis all in one day because the market is very I'm going to avoid this one here as I speak. The market is huge. You got so many opportunities, so many stocks to choose from. So you can't do it all in one swoop. You have to continually just keep on weeding some stocks, adding some, and this process is done continuous. Whenever you have 30 minutes here, an hour here to do your research, just remove some, add some. That's how I do it. Over time you'll start having a feel for where to put your emphasis on. If you find a good stock, let it take you to a good sector. Now here's one that I would not mind tracking this one because look at this huge bullish RSI mountain. This tells me here's a quality stock that since 2009 has moved from about $7. Oh, again, I apologize for that. It's during the day and I got calls all day. Anyway, so I'm gonna track this one and I'm gonna just put an alert here for about 60. This is in other words, I usually go ahead and find out the exact monthly closing high, which is right there. But for the purposes of this video, just to keep it short, I'm going to estimate which is about 63.50, somewhere around there. Remember, it doesn't have to be precise, but by the time you buy it, you want to know the exact breakout level because that breakout level is what's going to be determining whether you want to stay with the stock or not. Because remember, the reason why we put this like here, let me take an example, like right here. If somebody was tracking this stock end of 2009 and the stock pulled back for about 2 months, so whatever price that was, which I would say was about $27, so you ignore the stock. Once it moves back, okay, that's fine, and then you put an alert for $27. Next time the stock moves above $27, which was there. Now remember, this is an ideal situation, okay? This is hindsight. Things don't work as sometimes they'll do, but this is hindsight, and it's just for example purposes. So take that into consideration. So when it moved above 27, that was your system should have alerted you something was going on. And at that time, notice that the stock the RSI was still above 69.10. That's a very powerful breakout, right? And since then, the stock has. So if you bought at $27, if anything, you doubled your money at 54, right here, and then some. You double your money in about 1 year's time, just under 1 year time, somewhere around there. You double your money. the RSI was strong when you bought it. And the bottom line is you never took a loss on the stock. You bought it at 27, and since then stock's been up. So this is the beauty of breakouts, is if things work out, remember the market was bullish in that time frame. So that's also something we should never forget. Now I want to show you that the ultimate more the breakout works as always. You see the RSI was good above 69. Look at the MACD at the time frame. So we're looking at February. You're looking at this time frame right there, which the RSI was good. I guarantee you that the MACDs were also good. So in February of that year, look at the MACD move to new highs right there. See that? MACD moves to new high. The other MACD moves to new high in February. February right here. Let me show that to you. So the ultimate more the breakout, this simple analysis of the market which we use. So February somewhere around, I messed it up. Try again. Somewhere around there. You see that the market moved to new highs right there. Whoops, right there and right there, close to new highs. So the MACDs and the RSIs were telling you this was a good stock to own back then. So I'm going to track this one, and I've already done so. So VR, I'm not going to track this one here just because right now it's going to take many, many months for this thing to turn bullish. I see the moving averages crossing over. So this one is going to take many, many, many months. And maybe by then I would have visited the sector again. So, and pretty much that's it. That's it. That's the last one here. Now I remember I think we were either playing this one or watching this one when it broke out here at about $2.50, which corresponds with this breakout here, right there. The RSI moves to new high. Now the stock moved from 250 all the way to about 480. That's close to a double in about 4 or 5 months. It's a good gain, guys. And also look at where the MACDs were breaking out. So in other words, what I've just done here, shown you that the ultimate more the breakout works, and I've shown you how you go about reducing a list of many stocks to a few, and how you go about concentrating on just the ones that are about to break out. You set an alert and let the market come to you. Once you set an alert, let the market do whatever it wants, because ultimately the stock, if it's going to break out, you're going to get an alert. And when that alert takes place, you want to go and make sure that the sector is still one of the leading sectors in the market. And also, you want to go ahead and make sure that volume is good. You want your volume to be above average for the day of the breakout, okay? Because you want institutions to be part of the move in the stock, or the institutions should be the one moving the stock. Now, one way you can find out what sectors are leading the market is just go, and I've made a video about that on the My Secrets tab. But again, just go to tickerspy.com, www.tickerspy.com. It's very easy. Actually, a smart, kind of a nice name for a site that does this. And just click on indices right there, indexes. And it's going to give you like 1 day gainers, and then it's going to give you 1 month gainers here. So I usually just, for example, we've been looking at healthcare. I think the one we're looking at were business stocks. But today I'm going to have to spend some time looking at all these sectors here, one by one. Just looking at the sectors, making sure that I'm not missing anything. Because if the market is moving, and if the market is going to have a huge rally, these are going to be usually where you find the great new, fresh leaders in the market. I hope that helps. This is Eric Muathe with Muathe.com. Peace and blessings.